Hello, my name is Cory Cleveland, and I'm here with Craig Parry, CEO of IsoEnergy. Craig, thank you for being with us.
Hey, Cory, great to be with you.
I'd like to start with an introduction about yourself. You have a number of years in the industry, a number of successes, so I thought we would get some background on your experience there.
Yeah, sure, Cory. So I'm an exploration geologist by trade. I spent 8 years with Rio Tinto exploration in various roles around the world, including in uranium, where I was leading our pre-feasibility study of the Kintyre uranium project. And then I left Rio Tinto and went out on my own with a couple of well-known business partners, Owen Hegarty and Tony Manini in Australia. And we started a group of companies called the Tigers Realm Group of Companies. That included EMR Capital, where I'm still a shareholder and investor and partner, which is one of their major private equity funds globally. And one of the successes we had out of that work was NextGen Energy. We helped seed up and finance NextGen. And NextGen, of course, went on to make the giant Arrow uranium discovery. And that led me to Canada, where we spun out a number of assets in the Eastern Athabasca into IsoEnergy. And I've been running ISO ever since. And, very happy to report that we've made a second discovery, shaping up to be the world's latest great high-grade uranium discovery. And I'm also chairman of Skeena Resources and another company called Vizsla Resources, where we've made another gold discovery. So exploration and discovery, that's really my bread and butter.
And within the world of uranium, can we discuss the industry and what's happening there right now?
Sure, Cory. It's a really, really interesting time to be looking at the sector. And I think, the perfect time for investors to be taking a long, hard look at the sector again. Of course, the industry has been in oversupply since about 2010, when Kazatomprom and Kazakhstan brought on production. They flooded the world really with a lot of uranium. They went from virtually zero production 15 years ago to now providing 40% of the world's U3O8. So that's been one of the challenges we've had to work through. But we're getting to a situation now where the market, £194 million per annum market, primary production today, because of low prices and closures of mine production, primary production sits at about £120 million per annum. So we're in a deep undersupply situation. And of course, this terrible disaster we're going through at the moment with COVID-19 has resulted in further closures. You've seen Kazatomprom close their production. We've seen the second biggest producer in the world, Cameco, Canada's Cameco, close their only operating mine. So now we're in a situation where global production is about a third of what it needs to be on an annualized basis. So we're in a deep supply side deficit. And that started to have an impact on prices. We've seen prices rise strongly from $23 a pound only 3 months ago to trading about $34 a pound today. And we're expecting another leg up in uranium prices in the coming months. We really think that uranium prices are about to outperform every other commodity in the next couple of months. So it's a really, really interesting, critical, exciting time for the sector.
Can we discuss the buying patterns or how the industry purchases uranium and the contracts that it takes?
Sure. Look, and that's a really good, really important point to talk about. And of course, uranium, you need, if you're a utility, the big utilities, of course, in France, the US, Japan, China, where those guys are the biggest buyers of uranium today, but particularly the US utilities. You don't want to shut down a nuclear power plant. You've got to keep the feed up to it. It feeds the grids around the world. 15% of global electricity is supplied by uranium, by nuclear power. And so you must keep that going. And so to secure long-term secure supply, companies, utilities and producers enter into long-term supply contracts. Now that's drifted away a little bit in the last couple of years. We've seen the spot market rise to dominance, with a lot of material being sold into the spot market. And because the spot market's been flooded by that Kazakh production, the utilities that buy that material have not felt the need to enter many long-term supply contracts in recent years. Now this exposes them greatly. And when you see a supply disruption like we've seen, things move very, very quickly. And that's what we saw back in 2007. We went through a massive uranium boom. Uranium prices went from $9 to $160 a pound. Some of the companies in the space like Paladin, there's nothing quite for investors making money like a uranium boom. Back during that boom, when we saw uranium prices take off, one company in particular, Paladin, went from about 5 cents a share to $10 a share. So, and that was all driven, that price rise and all of those equity successes, share-based successes, were driven by the uranium price and utilities wanting to get into long-term contracts with customers because they didn't see enough supply out there. So they all panicked, piled in, wrote long-term contracts, and we've still been working through some of those long-term contracts as recently as this year with very high uranium prices locked in over a 10-year period. We can see a time coming where we'll get back to that situation, and these customers become really quite desperate for product because it's not out there.
And Craig, can we talk next about IsoEnergy and your position in the market?
Yeah, look, absolutely. So we're at a fairly early stage of the cycle in terms of we've been exploring, we've been building up a land position in that Eastern Athabasca area. Eastern Athabasca is home to the 2 biggest uranium mines in the world, the highest grade deposits in the world, and of course the Athabasca Basin is in Canada's province of Saskatchewan. Saskatchewan's the #1 mining jurisdiction in the world, so it's a great place to explore and also happens to be home of high-grade deposits. We've been building up our land position out there and exploring them, and we've had the great fortune that we're backed by our major shareholder, NextGen Energy, who owns 52% of the company. That's afforded us the ability to acquire projects, do deals, fund exploration when no one else has been working on uranium exploration much in Canada. And that work has finally started to pay off. So about 18 months ago, we announced the discovery of our Hurricane deposit. We've been drilling there for the past 18 months. We had a drill campaign last winter, and we put out some of the best drill results in any commodity globally in the past year, including our best hole to date, hole 34, where we hit 8.5 meters at 34% uranium. Now, some of the viewers will know, maybe aren't familiar with what that means. So we like to put that in gold equivalent terms. That's the equivalent of 8.5 meters at about 400 grams per ton gold equivalent today. So extraordinarily high-grade material. And these Athabasca deposits and discoveries are the highest grade mines and highest in situ value rock on the planet. So we've got one of those. We're the only company in the past 5 years with a major high-grade discovery, and we're drilling that out. And we're about to kick off drilling again in 4 weeks' time. We'll have 2 rigs turning, and we'll be drilling in and around some of those high-grade hits we've got there at the Hurricane discovery. And so, we're expecting very strong, very good news flow over the next few months and towards the back end of the year, just as the uranium price resumes its upward trend.
So, Craig, with your deposit and the drilling results you've had, what does the future look like? What's next for IsoEnergy?
Sure. Good question. Important question, Cory. So we've made that discovery. We've had very good results. We're getting to a point now where we're drilling out the deposit. Of course, the next primary step for us is to announce a maiden resource. We're about to kick off our summer drill campaign with 2 rigs. So we'll have a lot of news flow over the next 3 or 4 months as we get those results out. And then that will feed into our maiden resource. And I should point out, with NextGen Energy, we made that discovery and our share price went very, very well. But it wasn't until we put out our maiden resource that the price really took off. I think we went from 80 cents to about $2.60 in a matter of months. Here we're about to enter that phase with IsoEnergy. So it's an incredibly important, exciting time for our investors. So next step, announce the maiden resource. We're taking some early steps right now. We've appointed a gentleman called Peter Longo to our team. Peter was the COO of Denison and led the team there to the development of their projects. We brought him on board to lead our development work here. And Peter's got an early start on some of the study work and looking at the deposit from a mining perspective. So we're already looking at it that way, and then expect a maiden resource, and then we move straight into the studies and permitting phase. And what we'd love to do, what we're trying jockeying to do, is put ourselves in a position where we can capitalise on what we think will be a boom through to 2025, 26, when that supply-demand gap really opens up in the market. And we'll be looking to bring on production over that sort of time frame, should the deposit support it. Early days, but that's how things look out 5 or 6 years.
Well, Craig, thanks a lot for this. It sounds very exciting, and thank you for your time.
Cory, a real pleasure, and thank you for your time as well. Cheers.